Thank you very much. Okay. My name is Ed Gutowski, and as Evan mentioned, I'm the Chief Architect for the RapidReconciler product, which we will be learning a little bit about towards the end of the presentation. Today's presentation is the Insider's Guide Fixing the Top 6 Issues with Inventory Reconciliation. And first of all, I'd like to talk just for a second about the reconciliation process, and we all know what that is. It's the process of recording all of our transactions as they pertain to inventory within the bounds of the general ledger in JD Edwards. Now, anybody who has worked on this process in the past realizes that when you actually go to implement it, typically what happens is you end up looking like our little friend down here because it can be very frustrating. The good news is that we've been looking at these particular processes for quite a few years now, and we've been able to identify what the big 6 issues are for reconciliation. And I'd like to kind of summarize that for you right now, and then we'll go through each one of them in a little bit of detail and talk about it. First is going to be the automatic accounting instructions, acronym that everybody knows is DMAAIs. This is probably the biggest, and there's no probably about it, it is the biggest contributor to reconciling items in JD Edwards inventory. And we'll talk a little bit about how we can get our arms around this. GL class code control. It's not quite as simple as just going into the item master and changing a GL class code. We need to have some control processes in place in order to do it correctly. Product costing. That's a complex process. There are some integrities that we can run to make sure that everything is in place. If we have issues there, it's going to lead to variances as well. Process controls, and we'll talk about a little bit of the back-end processing, some of the things that we can do to keep tabs on what's going on within our system and to make sure that transactions process as they should. Something that most companies just don't do for whatever reason, and that's manage their cardex integrity. It's not a very simple thing to do within the confines of JD Edwards. So we're going to talk about that for a couple minutes, and we'll give you some hints on how we can manage things there. And then lastly, how do I actually get my inventory data out of the system? And we're going to talk about the 2 options that are available to us and which one's better, which one's worse, and see how we can go about doing that. So those are the top 6 issues. They have been identified. So let's now go through each one of them and talk a little bit about what the problem is and what we can do to help resolve some of these things. Okay, firstly with DMAAIs, accuracy is key. So I'd like to bring up 2 points along those lines. One is to use what I'm going to call the model table concept, and I'll explain that in a little bit more detail shortly. And we also want to limit the use of the wildcards. And by wildcards, what I mean is using company 0 or those 4 asterisks for the GL class. Now, they do have their place if they're used judiciously, but a lot of times people will put them in just to avoid typing, and that can cause a lot of problems. So the model concept, what I mean by that is, and forgive me, I know that this graphic is a little busy, but it's done that way on purpose to show you that the DMAAIs are quite complex. So what we've done and what we try to implement when we do these types of exercises is the concept of a model table, which really means we take one of the DMAAIs on the balance sheet side, and the one that we like to use is the cycle count DMAAI, or table 4152 for document type PI, and we go and we vet that one out. Okay, so we'll go through and make sure all the companies are in there, all the GL class codes are in there, and all the GL class codes are referencing the proper balance sheet account. Once that's done, we can use that as a baseline to check all of these other DMAAI tables that you see in green that support all the different transaction types that you have set up in your system. Now, the thought is that they should look very similar, if not exactly the same, as compared to the model. Now, of course, that's not a 100% cast in stone rule, as we can get very clever with certain transactions and have them do different things. However, for the most part, if I have a GL class code that means raw material, and if I cycle count that, I'm going to debit or credit my raw material account for any changes. Well, if I issue that to a work order, wouldn't I want the credit to go to raw materials? If I did an inventory adjustment, wouldn't I want the debit or credit to go to raw materials? So the GL class should look the same in all the different DMAAI balance sheet side accounts. Okay, so the concept of the model table is vet one out, have a report that now compares it to the rest of them, find the differences, and make any necessary adjustments. So limit the use of wildcards in your DMAAI tables to start. Use the model concept to find errors that may be in your system. Cleaning these errors up will greatly reduce the number of reconciling items that you're experiencing. Okay, issue number 2 is GL class code. We want to have a change control process in place. And I'm going to talk about 2 things. Consistency on the levels, and we'll talk about what levels there are, what I mean by levels, and then what a good control process consists of. Okay, so levels first. When we set up a new item, the very first thing we do is we set up an item master. That item master gets copied to one or more branch plants, of which that item will have one or more locations or lots within each branch plant, and then we start transacting. We can put sales orders or purchase orders in against those items accordingly. Now the GL class code goes into the item master and gets copied down to the branch. Then from the branch, it gets copied into all the locations, and then from there, it gets copied to all the sales orders and purchase orders. So you can see it's a multiplying effect as it goes down. So if I have an item and I set it up as a raw material and I start transacting and all these things are set up as raw, and all of a sudden I realize, well, I called it a raw material, but I need to change that to a finished good. How do I do that? Do I go back and just change the item master? Do I change the branch? The system will let you do that, but that's not really the way that you should do it. So let's talk about a control process. Now, in order to change it correctly, what you really need to do is if there's any on-hand inventory for the item where the code is being changed, that needs to be adjusted to 0, right, before the GL class code is changed, because we want to close out any activity for that item. So if we think about that, inside of the item ledger, right, if we have transactions, say, that add up to 10 units and there's 10 on hand, those are all done under the initial GL class code. So in our case, raw materials. So we want to adjust it to 0 to zero out the quantity on hand, have the transactions that have the raw material GL class code summarize to 0. Then we can go ahead, change our GL class code to finished good. We want to do that at a minimum on the branch plant and all the locations and lots associated with that. Okay. The item master is not that important. It doesn't really get used after the initial setup. It's only used for a copy down. We can also go back and check our open sales orders and purchase orders, but they will bleed out eventually. The branch and the locations are really where the change needs to take place. Once that change is made, we can go ahead and adjust the on-hand inventory back. Another thing that this will accomplish is, let's say I had those 10 units in raw material and they were $1 a piece. Well, now I have $10 in my raw material account. Just changing GL class codes in this structure does not create any journal entries. So once I adjust it back to finished goods, those 2 adjustment transactions now will actually move the dollars on the balance sheet as well. Okay, so you have to adjust it out first, 0 out the raw materials, change the GL class codes, adjust it back, will now debit the finished goods account, and the dollars will end up where you want them to. So again, it's not a simple matter of just going to an item master or a branch plant and typing over the code on the screen, wiping your hands and calling it a day. Okay, we have to think about what happens within the system, especially if we've started transacting against the items. Issue 3, product costing. And here I'm going to talk about a couple of integrity reports that are available to you, right within JD Edwards. And of course, there's one that we should run that's not available, but I'll give you a hint on that. So the first would be this ledger component integrity report. And I'll throw up an example of that for you right here. It's report number 30543. And what this is doing is it's taking all of the items that we've done our cost roll on, and it's comparing what that rolled up value is to what is actually in the item or the cost ledger. Okay, so we have two different tables that are going under the microscope here. One is the cost component table, the F30026, and the other is the cost ledger, which is the F4105. The inventory transaction uses the cost from the cost ledger. When I run manufacturing accounting uses the cost components from F30026. So one can imagine if these two are not the same, well, then I'm not booking to the GL the value of my inventory. I'm going to create variances. So it's important that as part of your validation process, we run the cost component ledger integrity report, and we make sure that we don't have any items with variance. If we do, those need to be fixed. The part may need to be re-rolled. Another report that we can run is called a WIP revaluation. So if we're running a standard cost system and we do a full cost roll every year, you might notice that right after you do the cost roll, your manufacturing variance will spike. And then over the course of the next period or two, it will start decreasing, and then finally get back to normal. Well, that's because when you do your cost roll, there's nothing that automatically updates any work order on the floor to pick up the new cost. So when I create a work order, as soon as I attach the parts list, a copy of the cost gets assigned to that work order. Well, as it's sitting there, if I don't do any activity against that work order and then I do a cost roll, well, now the items are still in inventory. They haven't been issued to the work order yet, but the costs have changed. Okay, there is a WIP revaluation program that will actually go up and update those work orders and save you a whole bunch of reconciling items in manufacturing. There's also a WIP valuation report, it's 30838, where you can run that. You can run it in proof mode and you can see what the impact of that cost roll has on your open work orders. Okay. You can also run it in final and it will actually go update the work orders for you so that we can mitigate all of that different variance. Multiple cost integrity. This one is a very little known item that occurs, and what this means is that if you're familiar with the cost screen within the item master, you know that I can go in, inquire on an item, I can go to the costs and see that I have a sales inventory cost method of 07, I have a purchasing method of 08, et cetera, et cetera. Well, sometimes behind the scenes what happens is in the data, more than one cost method gets flagged as the inventory value. When that happens, okay, all you see on the JD Edwards screen is the first instance. So if 07 comes before 08, that's what will pop up. But in the data, it's duplicated. That can cause problems with inventory reports. So you run your report, all of a sudden you're getting an item with double cost because it's finding two cost methods marked with the flag that says it's inventory. So what I have here, and you can download these slides from our website, is here's a query that we've written to check for this situation. And you guys can use this as a model, give it to your IT department, and just run a query over your costing table to make sure that you don't have this multiple cost issue, okay? So those are three things that we can do to ensure our product costing is not contributing to inventory variances. Okay, the fourth issue, control of your back-end processes. And for this, I'm going to talk about three different areas. One is manufacturing accounting, one is the sales process, and of course the GL batch postings. We want to keep all of these three things under control. Now, for manufacturing accounting, a lot of times when I talk to people, They don't have two versions of manufacturing accounting set up. They have the full version where I'm done with the work order, it's fully completed, I need to get all the entries in the GL so I can run my variance accounting, so on and so forth. If you have work orders that have a significant cycle time, let's just say a week, 2 weeks before this work order is completed, and I'm continuously issuing material to that work order, don't I want to book those material issues as they occur and not wait till the work order is fully completed? If I don't, then I'm going to create a big discrepancy between my general ledger inventory balance and what I really have on hand. Okay, so what we recommend for that is to make sure that you have what I'll call a partial completion version on there. So when you run manufacturing accounting, you say, oh, the status code is less than 90, and I'm going to update all the activity against that work order. I'm going to create the journal entries, but I'm not going to change the status code. I'm not going to bump it to variance accounting yet because the work order is not fully completed. So just make sure that you have a full and a partial version of manufacturing accounting set up. From the sales, okay, I like to call it a sales pipeline report, and it's basically works off of status code. So the sales order process, typically inventory gets touched during the ship confirm process. That's when inventory usually gets decremented. The general ledger, of course, doesn't get any entries until sales update runs later that night. But in between, a lot of different things could happen. So for example, on a sales order line, I can ship confirm it. Then I have to print a bill of lading. I might have to generate an advanced ship notice. Then I have to produce an invoice. And then finally, I run sales updates. So there could be 2, 3, 4, 5 or more steps in between when the inventory gets decremented during ship confirm, and by the time sales update runs and picks up and creates the batches for that. So I would recommend having some type of status report that you can say these sales orders are at these statuses. So if something gets stuck, I can't produce the invoice, something gets stuck at bill of lading, you know about that so that that can be addressed in a timely manner. Otherwise, we're generating variance again. Okay, in batches, GL batches, I always suggest that you automate the approve and posting process wherever you can. Okay, a lot of times I'll go in, I'll do in a class, and I'll ask, do you auto approve and post your batches? And the answer will be, well, no, we do that manually. And then I just ask the question, have you ever not approved one? And typically the answer is, well, no, we approve them all. Then why not auto approve them? It makes no sense. Okay, so if you can do it, do it. It just saves you some grief and time. And also, there is a missing header, batch header integrity report that's quite helpful. And this report can actually recreate headers for you. So if you've ever run into that where you're missing a batch header, that means if I go onto the JD Edwards screen, there's a batch out there that's not posted, but you can't tell from the screen because if the header isn't there, it doesn't show up. So make sure that you have this integrity report as part of your process. There is also an option to automatically recreate the headers. So if you put it on your job schedule right before the batch posting programs run, you won't be missing any headers anymore. Okay, so that again ties up your account balances to make sure that they're accurate and gives you a better reconciliation process. Okay, fifth, the cardex. This is the one people, I don't know if they just don't do it because there are no tools or because it's difficult. Both things are true. Okay. Now, what am I talking about when I say manage the cardex? Well, the cardex, also known as the item ledger, lists for any individual item all of the transactions that represent and add up to the quantity on hand and the value of the item. Okay, so if we were to, let's say, export the cardex details to Excel from this grid and do a summarization, okay, the totals that I get from these details should add up or better add up to the quantity on hand and the value. So The quantities add up to this, the extended amounts should add up to this. If they don't, we have an integrity problem, and those integrity issues need to be corrected. Okay, so for example, we could have something where the quantity adds up, but the dollars don't. And if we have that situation, we need to do a dollars only inventory adjustment to correct it. Okay, so there is a corrective action for this. If we add up the units and the units don't match the balance, we need to ask IT for help to get this to tie out. So what I mean by managing your cardex integrity is that every item, this needs to roll up. Can you imagine if your checkbook had this problem? If you got your bank statement and your bank statement said you have $1,000 in the bank, but you have 3 deposit slips of $500 apiece, right? So your detail, your ledger records say 3 $500 deposits mean $1,500. Don't give me a balance of 1,000, right? Something's wrong. That's what we have to validate here. We do those checks in the general ledger. They also need to be done in the item ledger, okay? Not such a simple thing to do, okay? Especially when you have thousands and thousands of items, okay? Every one should be checked. Depending on the type of system you're running, whether it's a standard cost system or an average cost system, changes how you need to look at the items. If you're running a standard cost system, then you can filter an item, a branch, a location, and a lot number and get down to that level of detail. If you're running an average cost system, you need to know the cost level of the item first. So if you're doing costing at the branch level, then you can only analyze an item branch by branch. Okay, you can't go down to the location or lot level in an average cost system because it doesn't work that way. Okay, you have to export the records for everything. So the granularity of how you look at it is going to depend on which costing method that you're using. Okay, so these balances on the top of the screen do not come from the item ledger. They come from the item balance in the cost ledger tables. Okay, so this should add up to that, but in a lot of cases they don't. And when they don't, that's where a lot of reconciling dollars pile up and nobody knows about it. Okay, so we need to make sure that we have a process in place to manage our cardex. Okay, and finally, issue number 6, how do I get my inventory report in the first place? How do I write that? Because there are 2 options. Okay, one is I can do a balance-based report. And what does that mean? That means that that's a snapshot at period end. That means that I've timed the report to run at midnight or whatever time on the last day of the period, so I know, right, what my inventory balance is at that moment in time. Okay, but what happens if I run 24/7? I now have to stop my operation and get everybody off the system in order to have that report execute accurately. And what happens when I start backdating transactions on the first day of the next period? Don't I have to now account for that in the prior period? So now I have to know all of those types of transactions so I can back them out of the report I ran because all that inventory was actually there, right, the night before. So now it just becomes that much more complicated. Or can we do something more along the lines of a transaction-based report? Okay, so if you do it based on transaction summary, you can run that anytime you want. You don't have to time it to run midnight, midnight on the last day of the period. I don't have to stop my operation, right? Because every transaction has a date associated with it. It's not a snapshot. Okay, so it really sounds good to do a transaction-based inventory report. But the question becomes now, how do I do this? Okay, how do I do all of this stuff? So I went through 6 items, kind of told you a little bit of background about each one and why they're a problem, some hints about what we can do to get our arms around it, but JD Edwards doesn't have all the tools in place to handle all of this stuff. So here's where I'd like to introduce RapidReconciler, and as Evan mentioned earlier, it is an Oracle validated solution We've designed this specifically for J.D. Edwards that covers the perpetual inventory, goods in transit, and receive not vouchered modules. We reconcile those to the general ledger. And of course, we're focused on our perpetual inventory here this afternoon. Okay. So the benefits of using the product, is we have configuration integrity reports built in. We'll tell you about those DMAAIs that are mismatched. And if you're using the wildcard zeros and all those asterisks, it won't really matter because we create a full set of DMAAIs based on those entries. We also have an integrity report to find those GL class code inconsistencies or the frozen cost variances, multiple costs, all those things I was telling you about before. Okay, we have those reports all built in. Okay, we also manage the back-end processing. We'll show you which work orders aren't processed. We'll give you a sales order pipeline. Okay, we'll tell you which GL batches are not posted and if any of them are missing headers. Okay, so you'll get all of that different information. Okay, and we do produce a transaction-based inventory report. We have our calculation strategy that we put in place, and we do not use the J.D. Edwards as of table, as we've learned over the many years of analyzing it that it is not an accurate source of information. Okay, so we have built our own. Okay, so with that, let me get out of slides and I'll show you the product itself. Now, RapidReconciler is a web-based interface, and you access your data through a web browser. However, all of your business data stays on your servers behind your firewall. So when you log in, you're getting the web page downloaded to your computer from our servers, but we just pass IP addresses and some technical things so it knows where to go on your network to go find the data and display it to you. Okay, so we present a home page that looks like this. This is the inventory reconciliation page, which is like a summary. Okay, here's where you set your context. Okay, so you'll see in the filter section up here, we have our options of how we want to look at our inventory. So you'll see base currency, company, business unit, object, or subsidiary. So, and you can see the check marks. So for example, if I want to just look at one company, in this case, company 10, I deselect company 50 and everything kind of moves into place, okay? So in company 10, I only have one business unit, but you can see I have multiple object accounts and multiple subsidiaries. So I can pick and choose any combination that I want to look at. So it's very flexible and will match up with how your business actually works. And on the home page, this is where all the information comes from, and we can drill down into details from here. So for example, in the valuation section, we'll see that we have our GL balance, right? Our perpetual balance as calculated by RapidReconciler and what the difference is, okay? This is a database. So as the transactions happen, as we update our data, which is done in batch every night, okay, this database builds out. You have a period selector up here where I can say, this is the period I want to reconcile, okay? So we can go and select what we want to look at. So it just keeps building. So I can go back in history and get all of my reconciliation information very quickly, okay? So here is the valuation. Here's my GL, here's my perpetual. Am I in balance or not? And the answer is no, I'm $3,800 off. The variance calculation now will answer where does that come from, right? Now, these are all the different sources of variance that can occur within the period. So a carry forward means that I carry any variance forward from the last period. Okay, so the answer is no. Do I have any unposted GL batches? The answer is no. I can see that immediately. End of day, do I have any sales orders that are stuck in the pipeline? Do I have any work orders that haven't fully processed? Do I have any partials out there that I haven't created the journal entries for yet? And in this case, the answer is no. Of all the transactions that I did do, did they match up precisely with the general ledger? And the answer is no. They were different by $433. Do all my items add up to the balance? So here's the cardex integrity. Yes, they do. Did I make any manual entries into my account that either brought something back or threw it off? And the answer is yes. Okay, so if I look at this and I see $3,800, and I look at my variance sources and say, where did it come from? We had a little noise in transactions, but the bulk of it was because of a manual journal entry. Okay, so you can quickly tell just by looking here where your variance comes from. Now, the other thing that we teach is, if these items are not zeros, what do we do? Okay, how do I get this to go to zero? How do I eliminate the variance? Okay, so that's part of the training process. Now, if I look at my out of balance history, this tells me for every period that I have in my database, what my out of balance was at the end of that period. So in a perfectly executed system, you should have a flat line on zero all the way across. So you can see that way back I was perfectly in balance. And if I click on that, it will change the period to show me that. So we can see we had a big carry forward, we journalized it, took care of these transactions, now we're back at zero. If I go to the next period, zero, had some transactions, I journalized them. Go to the next period, same thing. Whoa, what happened here? We have a big drop off. Big on transactions, we overshot our journal entry. Okay, but we've brought it right back in the next period, so on and so forth. You can see how this is moving and rolling forward. And this is perfect, right? Our GL balance, our perpetual balance perfectly match. This is what we want to see. Okay, so that's how you do this. And all of this, and if I go back up, let's go to like a current period. Here's some end of day stuff. You'll see that there are little icons here that if I want to drill into details, I can drill into details. Here's all the work orders. Here's the status they're at. These have not been booked to the general ledger yet. Okay, so before I can close the period, I can export this list and say, okay, work order manager, please process all these work orders so I can actually close the month. Okay, very simple to get all this stuff. If I have sales in the pipeline, here's a sales order list. Here's the status codes that they're at. Okay, sales order manager, can you push the invoices, get the bill of ladings produced so that we can close this period. These sales orders are out there. They've been shipped, okay? They've been shipped, but they haven't been booked yet. So now we have to get that stuff done, okay? So this will manage all of that stuff. Now, the other thing that we have, you know, if we want to drill into some transaction detail, we can do that. There's a transaction page. All the failed transactions are here. Okay, wrong page, sorry. All right, so if there were transactions in the period, let me find a different period that has something. Here's a list of all the different transactions that caused our problem in the first place. They're all broken down into the type of transaction they are, order types, doc types. We can filter them down and see where the biggest issues are. Right, I can see there's some in manufacturing and some in sales. So if I just want to look at the sales orders, I could target the sales orders. So here's 14 sales orders. Okay. If I want, I can say what order type is giving me the most issues. That would be CO. So I could isolate the COs now and say these 4 orders caused most of the variance in that period. Okay. So this gives me the order number, the invoice number, that type of stuff. To get the item detail, I hit the plus sign. When I hit the plus sign, this will give me all of the detail entries for that item, including what's on the sales order, so you don't have to go back and forth in JD Edwards to try to find this information. Okay. Now, also what we have in here that's very important is we have our as of. So we have a full as of, will give us all of the item detail information for whatever period we have selected. And this will match up to the reconciliation total that's on the front page. So this is your backup. It's item by item. Okay. Now this does take a few seconds to come up. There it goes. All right. So there's all the items. This can all be exported to Excel pretty easily. And for every item that I see here, I can expand the details and get all of the individual item ledger transactions that represent that balance. So it's very handy in the event of audit. Okay. And the last thing I'd like to cover is some of the built-in integrity reports that we have. So for example, remember I talked about the concept of the model table? Well, here's the model table that we used and vetted out. Okay, so all of these different geo class codes, we know that these accounts correspond with those geo class codes the way we want. Then we bounce it off of all the other DMAAIs. Oop, the object account doesn't match. Oop, this one nets to 0. Are we sure we want to do that? Because the 4122 and 4124 are set to the same account. We need to review that. So we have some net 0, the objects are off. There could be subsidiaries off or business units. So there's a lot of checking that's done in here to make sure that the DMAAIs are the way we want them. Here's some unit of measure conversion integrity. We don't have a pound to foot conversion for this item. Somebody needs to go back and add it so we can roll the quantities correctly. Here's your geo class integrity. Here's where the branches don't match up with the locations. We have different geo class codes. Those things we need consistency. We want to get that fixed. Here's a frozen cost. Okay, our cost components don't match the ledger. These parts should be re-rolled. Okay, duplicate item costs, I talk about that. Right, we have a report built right in, as well as others. So there's a whole bunch of integrity reports that can be part of your monitoring process to make sure that your system stays in place. So that's how RapidReconciler works. It's a tool that's built to reconcile inventory, to address the issues that drive the vast majority of reconciling items. And it's a very easy to use product that helps you get to the root cause and stop the variances from happening and end up with a nice flatline 0 that we'd all love to have. And with that, let me turn it back over to Evan.
Great, thanks, Ed. I will go ahead and get control back. All right, so Ed, thanks for that presentation. Great content as always. And everyone, what we'd like to offer to you is if from what you saw today with the demonstration, if you think it'd be something you'd want to take a deeper dive at, we want to offer you what we call a proof of concept, where we will take your data out of JD Edwards, run it through RapidReconciler, and then present it back to you in a demonstration. And typically, you see the cost is $5,000, and but if you decide to move forward and you sign within 45 days, the cost will be $3,500. So you can contact either myself or Ed if you'd like to take advantage of that. And again, here's just a list of our upcoming educational webcasts through the end of the month. And if you'd like to sign up for any of those, you can do so at getgsi.com/webcasts. Also, if you're looking for other great JD Edwards educational resources, you can go onto our online resource center on our website at getgsi.com, create an account, get access to all of our past recorded webinars, our recorded 9.2 online workshop, presentations, white papers, and much more. You can also sign up to be notified about our weekly webcast and our monthly newsletter. Now, we are still accepting questions, so I'll give it a minute to see if any others come through. Ed, while we wait, anything else that you want to go ahead and mention about RapidReconciler?
RapidReconciler, again, we discussed the inventory today. It also covers the in-transit and receive now vouchered modules. It does a really good job, especially with the in-transit. JD Edwards does not have much of an offering, and in fact, they don't have any to match up your sales orders and your purchase orders with the general ledger. So if that's something that's a large part of your process, it would really be worth doing a proof of concept to see how that can help you out.
Okay, great. Well, I don't see that we had any questions come through, Ed. So one, I want to thank you for presenting, and everyone, I do want to thank you for attending. And you will be receiving an email with a link to our resource center on our website, where you can access the recording for today's webcast, as well as get a copy of the presentation. And also, everyone who attended today's webcast will be entered into a drawing for a $25 Amazon gift card. And we will notify the winner via email. So again, everyone, thank you for attending our presentation. Ed, thanks for presenting. Have a great day. Thanks, Ed.
Thank you, guys.